I've been following the market for distressed corporate debt since about 2005, which is, not very long in the span of your career. But what I've noticed is that the spread over treasuries goes up in terms of the average, and the distress ratio goes up, and they kind of go up hand in hand. It seems to me that there is like a 6 to 8 year roughly credit cycle that tends to occur. So we saw a lot of defaults in 2001 and 2002, and that was mainly in tech, telecom, and media. And then we saw a lot of defaults, of course, in 2007, 2008, 2009, roughly 6-7 years later. And that, of course, was centered in finance and housing. And then people forget this, but there was a pretty good default rate and cycle in 2015, 2016 that was largely focused in energy. And so that would have been, roughly 7 years later. And I just wondered, Marty, are there any really early cyclical tells that you have seen in the past?
Well, it's a really interesting question, and it could sneak up on us more quickly than we expect. The base case at Moody's at this point, which has a pretty good model of default rate forecasting. I mean, they of course, what the inputs are will determine what the outputs are, and they have a pessimistic case and an optimistic case as well as a base case. But the base case really looks for default rates to actually continue declining from an already low level over the next 12 months. Now, the market is not as optimistic as that. There's a fairly wide gap between what the market expects on default rates, which again, I derive from that distress ratio. I've developed a formula for what the market's implied default rate, and that is over a percentage point higher currently than the Moody's base case model. So we could see, again, if we have some kind of a financial shock, and I think it will take that to get us there quickly, as early as 12 months, but not unrealistic to suppose that 24 months out we could be at or approaching a peak, and that would be particularly the case if we are sliding into a recession even now, and could somewhat sooner.
There's a reason why the world's best informed investors read my daily journal. Subscribe for free at portersjournal.com.